The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 26th day of June, just about to wrap up the month as this week concludes. So it's going to be very interesting to see what happens. We've given back those gains that were made at the beginning of, that was at the, let's see, June. That was end of May, beginning of June. 24,247 in the Dow, zips right up to 25,402. Remember, that's where we, just for one day, we changed from long to short. And then we got back in and reverse course at that peak D doji top, 25,402. The very next day we were short, and we've been short since then. And this is a pathetic. I mean, Dow's up 66 points after being down 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 out of 9 sessions. Today's the 10th session. Tiny little green candle. Day's young. There should be a rally. I'm suspecting there's going to be a rally towards the end of the day. But so far, this is 83 points after coming down over 1,400 points, almost 1,400 points. Needs more than that. So I spoke about this with my subscribers for my newsletter, the opening call. This morning I said, this little doji candle right here, got to watch it really closely because a close above it would impart a little bit more highs to come in the short term. So 24,463.73 is the number to watch. Let's go through the numbers. Dow's up 80 at 24,332. Made a low yesterday of 24,000. Was it 84? Yes. 24,000. I'll just type that in. 24,084. We're at 24,332. That's not bad, up 200 and something points from the low of yesterday, but considering what's happened, not good. The H to M pattern, lowercase h to lowercase m, template that I drew weeks and weeks ago, that's unfolding here. We'll see if the 24,673 9-period moving average this week is going to be very strong resistance, if there is even a rally towards that high. That level, I should say. The MACD deflected low, but it is capable of forming a W formation. At this particular point, we're remaining short. We've taken profits now on some of the short position in the Dow. Let's go on. I'll tell you what the support has to be today. 24,000 at this particular point, 24,280 to 24,260. That gets taken out by the end of the day. That's very negative. That'll be a big disappointment in the market. So the tide has changed. That's what I was saying last week, the most important week in quite a while, because I think there would be a trend change in the tide. In other words, it tells me that the larger, not the daily, but the weekly chart has the potential to pull back fairly substantially. That's kind of what I'm looking at. Let's go to the S&P up 9.79. Again, not very good action after coming down from 27.91 down to 27.90. What was that? 98, 27. Whoa. 27. Yep, 698. Let me just put that in here. 27,698. Do that correctly. 27. Not 27, 26.98. Trying to do two things at once. What's really important about this particular week is that if there's a very strong rally towards the end of the day Friday, some of the indexes, unlike the Dow, some of the indexes are going to hold very well. And that's going to be very important. If there is further selling to come, which I think there will be a little later in the week, then we're going to be watching support levels very closely. Meantime, 27.27 right now on the S&P. Key support at 27.16 to 27.13 on the day. And on the upside, a break in the 27.35s would be very positive, at least in the very short term. Let's see if that can happen. Let's go to the QQQ. The QQQ right now trading up 1.01 at 172.38. This is the Power Shares QQQ Trust Series. What's really important about this is that you've gone from the 177.98 high of just 6 sessions ago to a low yesterday of 169.81. Let me type that in. 169.81. And that's one of the deepest declines we've had in a short period in quite a while. But the upside has been spectacular. So this is really nothing. Trading towards the end of the week below 168 says, aha, now we're going to impact that weekly. Weekly so far is in leg C, probable peak C this week, and a leg E in the monthly still very, very strong. IWM, the leader of the pack to the upside for 2.5 years, became the instigator for the broader sell-off over the last couple of days. And we've gone from 170.20 on the 20th of June to the 164.14, 160, what am I doing here? 164.14 low of yesterday, trading 165.84, up 77 cents at 165.87. Now, this is going to be very important. Why? Because 167.07 is the 9-period moving average, and just a little under it is the 14-period moving average. I'm watching these really closely. Here's the reason why. Wait a minute. Yes, here's the reason why. There's a very strong leg B in the daily chart. So in the weekly chart, that leg B has pulled back and it hasn't yet closed under the 9-period moving average of 163.64. And that to me is critical. A close under that by Friday, a close under that at 4 p.m. Friday would be very important. That'll establish that, yes, we're having that long-awaited consolidation in the Russell 2000 ETF, the IWM, and that's going to be, to me, very important. We were very fortunate in shorting the very top tick of this multi-year rally. Whether it's just a brief sojourn to the short side and we get taken out, we'll see. We did take some profits on that position this morning because I thought that there'd be a really good chance of an update today, a very good chance of a rally attempt. We'll see what happens. This is going to be a very important indicator. Let's go straight to gold. Gold is trading down 4. Now it's down 6 at 1262. Gone to a leg E to the downside, extended the weekly arch formation. Now we're just about to touch the low that was made the week of the 15th of December of 1254.60. Today's low is 1256.40. Just reverse those. Another couple of points down, and we test that low. And that is, in fact, the uptrend support line in the monthly. This is a really important period for gold. Look at the dollar. Dollar was up a little bit. I don't know what it is right this moment. Why is it not clicking on? Dollar right now is DXY. It's up 20 cents. No big deal, but it's up 20 cents. Holding okay. It really needs to get to it's a 94.50, up 21 cents. It needs to get to the 94.85 to 95.10 area within the next few days. Otherwise, it's going to have a longer consolidation, sideways consolidation. Basil Chapman, as usual, scratch your throat suddenly in the middle of the session. Up 90 in the Dow, up 11 in the S&P. Be right back after these important messages. Host of the Tiger Technicians Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. So as I was saying, the dollar's up a little bit. This is going to be very important because there was a real nice spike into the 95.53 high just a couple of days ago. And we've come down. In the daily, it looks like it's come down quite sharply. But in the weekly, it says, ho-hum, nothing to see here. The buy mode remains in place. We've been long since the 6th of April. So I'm staying long. I still think that the dollar is the place to be. At this point, I see no reason to change their thinking. Now, let's go to the TLT because this is going to be very important. TLT is up just 18 cents. This is the Lehman 20-year iShares Treasury Bond ETF. And what we're looking at is, yeah, there's been a bit of a rally in the daily chart. A, B goes to a C. It's all underneath the previous high of peak B. This is really fascinating. Why? Because it's saying that yields are just stuck in a range right now. They haven't broken upside. They haven't broken down since they've had that really strong rally, the 30-year, the 10-year, and the 5-year. Now they're in the upper range. I haven't got them right now as a combination, but I can just show you the TNX. Look, the TNX is trading. This is the 10-year, is in an arch formation. It had made a peak C. It looks like it'll be an arch formation. So all I'm thinking here is that, you see, I drew this a while back. This is a very interesting pattern. You can go research it. It's called the Black Diamond. Now, the Black Diamond has all these incredible connotations. My experience has been with the Black Diamond is that there are other patterns you need to look for. And when it's devastating for many other reasons. But there's a whole background to the Black Diamond. All I can say is I'm looking at this and saying, high-level consolidation, chances are it's a peak F in the weekly charts, and it'll take quite a while for this to resolve after having such a big move. But at right now, at 2.875, 28.75, the TNX would have to break into the 31.5 area to really say that that is a breakout and yields are skyrocketing to the upside. I think they just kind of stuck. I would not be surprised if, as we're speaking, we're undergoing, we can't really see it, but we're undergoing some kind of rotational correction that is very much like some kind of mini recession, and it seems to affect different areas at different times. And this is what I'm looking at. Maybe this is in the cyclicals, because the cyclicals have been pretty badly damaged, like Caterpillar, etc. So I'm looking at yields just remaining in a trading band. Wouldn't be surprised if the 10-year actually at 28.75 goes down to the low 28s over the coming week or so. I just don't see it spiraling into the 30s. We'll see. We'll see. Okay, here's another thing that we're looking at: crude oil. Crude oil at this particular, I want to wrap this up. I want to get all this done very quickly. There's a lot to do. Crude oil is having a very nice rally. This is a leg B in the daily chart. It's making a cup formation. I'd say that I think that it could be a range-bound trade between the 69 something and 71-ish area. Wow, we're already at 70.21, and the technicals are actually improving. So I could be wrong. Most important, no, what I'd say, I'm sorry. It was 72s and 66s. That's what I was looking at yesterday. And that's kind of, I'm going to stay with that range. 72s and the 66s. That's kind of the boundary I'm looking at right now. We'll see if I'm wrong. Let's look at SCO, which is a nice way to look at things. SCO made a peak A, B, and then it failed. It's arching over. This looks like the 10-year Treasury bond yield, just the daily, not the weekly. So the SCO is, in fact, the pro shares of the ultra short. Crude oil, Bloomberg crude oil. Let me go back to the USO to see the, this is very good action. The weekly chart has made a peak D. It's pulled back now back over the 9-period moving average at 14.22. I'm going to have to change that a little bit. I think crude oil is having a little bit more strength than I anticipated in speed, not in price. I thought it would be a little while before the USO actually got into the 14.28 to 14.38 area. Looks like it could happen a lot sooner. So a little change there, making the upside a little bit higher at this point. But going back to crude oil, I think that 72s is going to be really the issue. Is at 70.23 up 2.15. Hey, that's big. What am I missing? Oh, high-grade copper. And we're done. High-grade copper, lousy action. Made that uppercase A, the Eiffel Tower. Boom. Comes down, takes out the left side low decisively yesterday. Today's trading under it. You got one more day to try to get to close above 3.0100. Cannot do that. It's a 2.9925. That's going to be real tough for high grade copper. Now, here we go. Questions. I couldn't get to some of them yesterday. A couple of questions. Of course, Boeing. My video at Boeing. It's in a sell mode. I was completely wrong. It did retest the high. Having done that, it made a cup formation in the Chapman wave methodology. This is the pattern that I call the drop bucket pattern. It's called the double top formation. Chapter 22 in my CD introducing the Chapman wave methodology. I'll get to that. I'll try to bring it up in the next break. Most importantly, what we're looking at is Boeing is up 94 cents at 332 after being at 374 back on the 7th of June. Round number open at 372. Remember I said bad sign, peak D. We'll see what happens. Now it's trading at 332, having hit 328, 27.60 yesterday. 50 points. That is about 17% correction, 16% correction. That's big. All right. So Boeing's not looking good. The XAL was a question. Let's get to that today. XAL, I did the transports, but doing the XAL, whoa, down another 58 cents, down at 100.73. This is a bear market in the airline index. I'm shocked. I mean, they just play the game, and they you can just do it for so long. Squeeze everybody like sardines and expect that people are going to love it. No, I think that the airlines are in for a tough time, at least in this early part of the summer. And then we'll have to see what happens. Maybe it's crude oil as well. Trading very badly at 100.71, down 60 cents. Smashed yesterday and continuing down today. Let me get to another question I had was, it was Caterpillar, if I remember correctly. I've got it in front of me, Caterpillar and UTX. Caterpillar down at 136.08, down another 50 cents today. Made a top back in, I forgot to put the date. Was that? That was January the 19th. I should put that in here. January the 19th. Wow, look at that. So, yeah. So this is a very serious, remember, this is the pattern that we looked at in gold. I must go back to gold. Remember the pattern I looked at in gold? We're seeing it all over the show. It's this Chapman wave propeller shaft. This is a very big propeller shaft. Outside is 173.24. January the 19th, week of the January the 19th, comes smashing down to the 142.88. Then it bounces up to the 160-ish area. It comes back, retest, and now it's broken below the support at 136. I wouldn't be surprised if it makes a 1-to-1. That could take it to 132 in the shorter term, based on the intermediate term, based on the weekly chart. Peak D in the monthly. This is Caterpillar, UTX, which we are still long. We've taken off quite a bit, actually. We've got just a small position left. Up today, 42 cents at 125.03. Leg A, gray leg A. Yeah, it's holding very well, and that's really what I was thinking. United Technologies is the one to focus on this whole summer, as far as I'm concerned. Basil Chapman, Tiger Ignitions Hour. We'll be right back after these important messages. And the Dow is now up 64. S&P's only up 8.8. They're really struggling. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Kansas City Southern. Kansas City, here I come. There we are. Kansas City Southern trading at 105.96, down 2 cents. Made a peak E in the monthly chart, which is way lower than the peak E that was made in 2014, up in the 125-ish area. Plummets down to the 64s, rallies up to the 114 area, and then comes with a little pop to the 114.91 high of 3 months ago, and now it's trading at 105. Yeah, this is going to be very interesting, and there are a couple of reasons why. You see, there's a downtrend line from the high that was made back in 2014. It comes in here and it says, hey, Kansas City Southern needs just to go to the 117s, and it breaks out again. Meantime, all it has to do is break support at 103. Be accurate here because it's this month. Yeah, close under 103. Let's make it 102 to be safe. 102, and it's a problem because it should come down to test the 100 level. And I've never seen a chart like this with this kind of cluster formation in a monthly high. It's like a sandwich effect. Every other month, red, green. Look at this. Green, September of 2017. Red October, green November, red December, green January, red February, green, what is this, February, March, red May, green, that's a green candle right there, green May, and now it's June, and maybe it's going to be a red June. For 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Now we're going to make it 10. 10 would be the best way to look at it. For 10 months, almost a year, you've had an alternating candle in Kansas City Southern. So all I can say is this. There are a couple of things going on. If you look at the weekly chart, all those red candles, deep red candles, interspersed with the little green ones, I'm suspecting that Kansas City better hold 104 over the next 3-4 days, because if it doesn't, it could go lower. This is going to be a very important period. Look at this, CSX. I don't remember if I've still got this notated. I hope I have. Yes, I do. A peak F top that was made, I mentioned this about a week or two ago. CSX Corporation Rails makes a high of 67.69 back on the 12th of January of June. And I'm just trying to see if there are any round numbers. No round numbers, but it made a peak F top, and now it's trading the 64s. So I'm watching these very closely. A lot of absolutely fabulous looking stocks over the last 2 years have just started to show signs that there's some weakness in this candle of May to June, the two candles of May to June. And if there's another one in July, suddenly the monthly charts are becoming a little bit vulnerable. That'll be very interesting. FCX, haven't looked at that. Freeport McMoran Corporation, copper and gold, copper, I think, and metals, makes a monthly peak D in January of this year at 20.25, trading now at 15.95. That's a big move from the daily peak F top, the most recent peak. I'm looking at this and I'm saying, I don't see much upside for now. I don't, at this particular point, I see quite a lot of support in the $15.30 to $15 area. A break under 15 would be very negative. So that's FCX. I would not be buying it right now. Next question I had was Ford. Ford. Up 2 cents today after making a peak E, double top at $12.15 on the 7th, retested at $12.15 on the 11th, and goes to $12.15 on the 12th. 3 out of 4 consecutive 12.15s, trading now at 11.52, having gone to the 11.40 level yesterday. Question: will 2,700? Sorry, I thought that was a question on Ford. Well, okay, the question is, will the ES or the S&P trade sideways or down into the 921 option expiration? Good question. I'll try to get to it in a moment. So Ford, big pullback after hitting the 12s. Now it's in the 11.5 area. I suspect it has to do a little bit more testing. 1120s and it'll be key support in the short term. All right, so the question about the SPX, I was going to do this for subscribers over the weekend. There was just so much to do. I decided I would not do it now. I'm going to do it some other time. But let me see if I can find it right here. You see this chart of the black background? You see these extraordinary channels There was another one here. I decided to change it, but I'm going to put it back just for the moment. Let's give it red. So new parallel, take it. Where did it go? Parallel. Ooh. Huh. What happened? I'll do it again. New parallel. Let's make it one of these. New parallel. Right there. Grab it at the end. Look at this. Fascinating. So there was, in fact, an up channel right here. And then it broke to the upside. And that became very important. Look at this channel. See between the yellow line and the green and the red line? All of a sudden, the angle of inclination, the angle of ascent became really sharp. I just wish I had my little protractor in front of me. I don't know where it went. I suspect that is at about 60, no, it's probably about 58%. This angle, I could be wrong, but I'm saying I think it's about 58, 62%. Once you start to get this incline, you don't want to break support. So S&P, absolutely, the support is trading right now 27.26, 26.10 this month, 26, and next month. Yep, 26, a close under 26.10 at any point in the weekly chart of the S&P this summer would suggest that we're going to have a very strong decline, and that decline should start to rectify itself in the early fall and start a big move to the upside. I'm just saying that's kind of a scenario. I'm going to refine it over the next few days. I believe I'm going to have enough information. I also need to see how the Russell 2000 acts. But in the meantime, that's the key support that I'm talking about. Made a peak D in the monthly chart at 28.72, and that 28.72 level from January the 26th, same as the Dow, the high was made. I'm watching it very closely because we've come back towards the level, but we haven't really gone. I'd like to see maybe 2,800 tested sometime in July, and then I'm going to say, whoa, we don't have to go much further. We're going to be going much higher. So that's kind of the way I'm looking at it. But look at these fantastic channels from way back in the 1990s. That beautiful up channel breaks, and we get a beautiful down channel, breaks to the upside, beautiful up channel, breaks to the downside, beautiful down channel. Then this magnificent up channel, and then all of a sudden, it started these change in elevations, in trend line support levels. Now it's gone, not parabolic, but it's starting to get to that area. I wonder if this is the year that we start to see the parabolic move. Well, we'll be back. Basil Chapman, Tank Conditions Hour, Dow's up 73, he's up 9.5. Not very good action. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. We're back. So this is what I want to say. You look, the 3, this is what I show my subscribers to my opening call. Every weekend, Saturday, I send out this chart showing the triple yields. The white one's the 30-year, the brown one's the TNX, the light blue is the FVX, the 5-year. So these 30, 10, and 5-year T-note yield or yields are just in the trading in the sideways range. What's really important, look, wood, the iShares Global and Timber Forestry ETF, trying to rally this week, but it's had a pretty serious 2-week decline. We'll see what it can do. And unfortunately, the HGX Philadelphia Housing Index has just made a new low. So this is now a leg E in the cup formation, testing the left side low. I'm not happy about that at all. All right, a couple of things. Oops, I didn't mean to do that. Let me go back to here we go. So within the context of the markets, what I am looking at here is that SLX. So I said, let's avoid steel, because this was my focus for a long time. The steel index did very well, but then I said, no, we're done. I don't want to mess around. Let's see what happens over the coming weeks, because steel now needs to make a profit. They can't rely on the tariffs and all. Now they've got to do the job, and I'm waiting for that. And I believe that at 45.78, the Van Eck Vector Steel ETF trading at 45.78, up 25 cents right now, it's kind of vulnerable to testing the 44s. That's going to be important support to hold. Goldman Sachs, here we go with all those financials. Goldman Sachs should be up. No, it's up 13 cents at 221.67. Horrible chart, just a horrible chart. I'm shocked at what's happening with Goldman Sachs. If you look at the XLF, though, XLF right now is up. It's down 12 cents now. So it's down 12 cents to 26.67, making a lower low. Leg C in the daily. Leg D, no, it hasn't started leg D. 26, the low of the week of 4th of May at 26.46. That's going to be key, and we're at 26.67. So 26.46, a close below 26.46 would be very negative. So that's the XLF, the S&P Select Financial Spider. And if you look at the KRE, which we are now out, took a little loss. We had a profit, but I just said, let's hold it a little longer. Now, I decided to raise the stop. We're out we were in at 63.99, and we lost $1, just over $1. I'm not prepared to play games, and just as well because it's gone even lower. I don't like what I'm seeing here in the sense that that weekly chart says, instead of holding support on the 9-period moving average of 63.31, we've gone under it, not we, the KRE. And it is leg D in the regional bank S&P Spider, trading at 62.47, down 40 cents. I'm just looking at this and saying, that's a leg D in the monthly chart. The MACD is now just not yet turned down negative, but it's very close. And the stochastic's down under 80% to 77%. I'm a little nervous about these bank stocks, and this is another reason for me to stay cautious, the general market. So with that said, let's see, there was one more question I never got to. No, I think I got to all 8 questions. Oh, 9 questions. There's a, oh, good question. So a question that really one should be the question that predominates right now. Is this a more than short-term to shorter-term pullback in the markets? I'm going to say, as far as I'm concerned, the way we are positioned in my opening call for subscribers, short the Dow, having been long the Dow, switch to shorting the Dow right there on the 12th of June. Yes, it gives some comfort, but that's not the issue. The issue is it's that weekly chart, and I'll just make it very clear. If the weekly chart closes under 24,000, I think that there's going to be a lot more time. I don't know yet about price, but a lot more time in the weekly chart before it can really garner strength to start a very, very strong move to the upside. And that is going to impact that monthly chart, which is still looking good in price. But the MACD, with 4 days to go, 3 days to go, is about to cross negative for the first time since it crossed positive back in, what was that, November of 2016. And the stochastic's down at 64%. On-balance volume is good, but tipping down, and you deflected low in the weekly. I have to tell you, a lot depends. And the reason why I want you to stay short the on any bounce, I want to try to stay short the IWM, is because this is going to be very important. If the IWM, Russell 2000, on a weekly basis closes under 163 on Friday, that's suggesting very strongly that we're in for more a kind of a multi-week consolidation in the best of the best, the iShares Russell 2000 ETF. I mean, that's just been the leader. Look at this chart. Oh, I meant to do that. That's what I meant to do. And now let me see if I can write that down. IWM and SPY. Let me see if I can get a relationship there. All right, very good. So yes, this long term. Look, the monthly chart is still spectacular. Let me just do that now while we're live, if I can find it. Where was that chart? Go back to this here. No, I'm not going to be able to do that on the spur of the moment. Nope, won't be able to do it. All right, I'll try to do that by tomorrow. I want to do a relationship of as I'm looking at it of say something like either the Dow or the SPY, the S&P, overlaid with the IWM. I could do it, I suppose. I'll do it during the break, maybe. I'll be right back with it after the break and with that done. But in the meantime, this is a very important look. CTAS, which is Cintas. This is this is overalls, uniforms, rentals. This is what tells me always over for decades. It kind of tells me a lot about the economy, and it's just been going straight up since the end of 2016. This is a very important candle, leg E in the monthly chart, the G/C in the weekly, little doji top right there, and 194.09, 13th of June, a doji high. That's that inverted little hammer there. This is going to be very important. Why? Because at 186.41, if it starts to trade under 184, that weekly chart is going to be impacted for the first time since back in the week of the late March, where the weekly chart closed under the 9-period moving average. The only time it's done that since it broke out back in February, I think it was. February the 9th. Remember that big sell-off? And then just once it went under 90 after that. So this is going to be very important. And any move to the 191 area, I have to say, oops, not ready maybe for prime time down. So we'll see. Okay. Next thing, I had a question. I'm not sure if that's a question or the dollar. Yeah, the dollar. I like the dollar. Waterfall? Waterfall is the other way around, EUR, USD, I think. Yeah, that had a waterfall decline back on the 13th of June, on the 14th of June. 1.185 was the high in leg D, and it plummets to 1.156. A little bit of a balance here. I'm watching this real closely, the relationship of the euro to the dollar. All right, we'll be back in a moment. I'll see if I can do an overlay. Otherwise, I'll do it for tomorrow. Dow's up 72, S&P's up 9.40. Basil Chapman, target questions out. Be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So yes, I had a question in the den about what is it? Basil, IWM. I shorted IWM within a day of you doing the same. I did for my own reasons listed above. Can you please describe why you shorted IWM merely as a Chapman Wave teaching? Yes. So what I did with the idea IWM right now is trading at 166.32. One of the reasons is there's a pattern that I look at, and it has an arch, and if you're able to make a very similar arch underneath it, in other words, like railroad tracks as they're turning a corner, they must be not quite exactly parallel. You're not going to be able to get that, but really close to parallel. So in other words, it's not a train line. They have to be parallel. These are expanding a little bit, would have been a little problem. And then there's a sudden push to an E or an F, and the technicals are starting to flatten. See, the MACD was starting to flatten out there, the distance between the fast and the slow-moving average. Stochastic was still good, but I was looking at the 120-minute chart, and that was showing a lot of strain trying to get to a leg D, which it finally did. When it gapped up, I think, was that a Friday or Thursday gapped up, I said to myself, wow, that gap is just, that's a purely emotional. It seemed to me from everything I was looking at that it was a price being pushed up by folks who felt they just kept missing the IWM. They had to get in or get back in. And that said to me that if there is a lower high, and the high was 170.20 on the 20th, I deliberated a lot. I said, should we wait for a pullback and then short? Or should I short before the opening where the pre-market was showing that it was even higher than 170.20? Short right there, because then my buy stop could be so tight that it's like an initial trade. And then I said also that this is like the first time we're ever doing it. So I might have to try once or twice, but this is the perfect technical opportunity. Leg D in the 120-minute chart, a gap up to a leg E with no veracity in the technicals. So that's why I did it, mostly because if it took out the 9-period moving average within a day or two, it actually took 3. That would say to me that was a really good trade, and now we just have to wait to see if this is going to unfold. So hopefully that answers your question. And then the WPH, I haven't traded that very well. I'm sorry about that. I'm gonna have to reassess it. I don't think my original plan was wrong. It's just the implementation right here. Folks, check out my opening call. I think you'll find it profitable and beneficial.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.